Good morning, everyone. My name is Jeff Meisner. I'm the Senior Developer Marketing Manager here at Avalara. Thanks to everyone for dialing in for our webinar on 6 things every developer needs to know about marketplaces. This has proven to be a very popular webinar, so we're bringing it back by popular demand. In the room today is myself, as well as our host for today, Bob Erdman, who is on the partner launch team. He knows everything that you need to know about marketplaces. And then we also have Wayne Meyer from the developer relations team in our engineering org. Wayne is also well versed in marketplaces and the API that powers all of this stuff. I am going to now turn it over to Bob to kick off the webinar. Go ahead, Bob.
All right, thanks, Jeff. Hey, everybody, good morning. Great to be talking to you again about marketplaces. This is a fun and fantastic time for marketplaces because it is so complex and changing almost on a weekly basis. So excited to be chatting with you guys about it. So before we get into the 6 things we need to know about marketplaces, I think it's great to kind of harken back to the decision on when things changed and why they changed and what the impact is of that. So if we think back to prior to 2018, the good old days of the internet retailing, you could go online, find a good, buy it from a marketplace seller or a vendor, and occasionally not get charged tax. So if that marketplace seller didn't have a physical presence or Nexus, actually, let me back this up because we will be talking quite a bit about Nexus. So let me make it clear as to what Nexus is. So Nexus is a legal term that basically equates to a merchant's obligations to collect and remit tax in a jurisdiction. Now, historically, that was tied to physical presence, right? So if I had a business location in 2 states, or I had a salesperson or inventory or some kind of physical presence in a state, that typically triggered Nexus, and that was the function for you to go out, get registered in that new state, and then start collecting and remitting tax. So physical presence was the key driver for a merchant's obligation to collect and remit tax. So that changed, and that changed back on June 21st, 2018. So the Supreme Court, I'm sure if you guys remember last year about this time, was a big item in the news. Supreme Court had a decision on South Dakota versus Wayfair. So South Dakota wanted to go after Wayfair, who was not collecting taxes in South Dakota, and South Dakota wanted that tax revenue. So South Dakota made the case that because Wayfair is selling into South Dakota, they have what's called an economic presence, and the court agreed with them. So it overturned the previous Quill versus North Dakota, which kind of reinforced the physical presence concept of Nexus. So the court concluded here that the physical presence rule of Quill is unsound and incorrect. That drastically changed the landscape. So the key takeaway from that decision was that physical presence really is no longer a requirement, but it's still very relevant. So it's if you still have goods in a state, that still triggers Nexus, in addition to now the new economic Nexus laws that states are rolling out. So when we're talking about economic Nexus, states have put up a threshold. Typically, it's about 100,000 in sales or 200 transactions being the most common. However, that varies from state to state. Now, this doesn't just apply to online sellers, but individuals sell anything. So any goods you sell would count towards that economic Nexus, not just sales through marketplaces, but sales through other channels as well. All right, so now let's talk about Marketplace Nexus. So the Marketplace Nexus requires online marketplace facilitators to collect tax on behalf of sellers operating through their systems. So what that means is states that have enabled or enacted Marketplace Nexus legislation means that the marketplace is actually doing the tax collection and remittance in these states, not the individual merchants. So the typical requirements include that the marketplace facilitator, the platform, collects the revenue from the customer and manages those multiple selling activities. Key provisions here are related to the marketplace collecting the state and remitting it or collecting the sales tax and remitting it to the state from the customer. Most states include the marketplace sales in their threshold calculation. So that means the marketplace, if the marketplace crosses that 200 transactions or $100,000 in sales, that marketplace now has Nexus in that jurisdiction, not just the individual merchants, although it still does apply to the individual merchants. So as we can see here, it's a changing landscape. So I've got a map up that shows the states that have enacted marketplace Nexus legislation and those that have proposed. So you can see here that almost half of the country has something in motion if it's not already enacted. And to get a little more detailed view, we have 15 states, and this is updated as of June, 15 states that have enacted marketplace legislation. And as you can see here, the threshold calculation varies pretty drastically from state to state, with Washington just having $10,000 as the threshold, whereas a state like New York, it's $300,000. So it's not a uniform threshold across the board. And then we have a whole bunch of additional states that have laws on the books that are looking to be enacted. Looks like quite a few of them here in July, and then more coming on as the year rolls on. So I think it's pretty safe to say that this is the way the trend is going, and we should soon see most, if not all, states enacting some sort of marketplace legislation. So what does this mean for you, the marketplace provider, and how can you make this a little easier? So within Avatax, there's two real models that we can use to address these complex Nexus and tax collection issues. So let's dive into them. We've got two models here. One is called the partner managed model. This is one where the marketplace really does all the heavy lifting. It's a single Avatax account that we've got two tax profiles, one for the marketplace and one for the merchants on the marketplace to enable tax collection and tax calculation. The other model we have is called merchant managed. That's a single Avatax account for the marketplace to manage the marketplace transactions, and then individual Avatax accounts for the individual merchants transacting on the marketplace.
Bob, can you give an example of each one?
Of what the
who would be an example of a partner managed, and who would be an example of a merchant managed?
Well, really, it's up to the individual market on how they wanted to accomplish the compliance issues. Really, what it comes down to is compliance. And as we get into the additional slides, perhaps that'll make it a little more clear here. So first, let's dive into the partner managed model. So this is again the single Avatax account with two company profiles on the account. One profile will be specifically for the marketplace. This is where the marketplace is obligated to collect and remit tax. So what we'll want to do here is make sure that any state where the marketplace has crossed that threshold and the marketplace is responsible for the collection and remittance of tax, we enable Nexus in that jurisdiction, and that when transactions come into the marketplace, there's going to have to be a gating function. So the marketplace is going to have to identify when a customer buys something, is that customer in a state where the marketplace is facilitating the tax collection and remittance? If it is, awesome. Transact that invoice or that sale against the marketplace facilitator tax profile. All right? Now, and we obviously want to record that transaction for later remittance. All right. Now, in the partner managed model, to facilitate tax calculation for all your merchants, again, remember we're talking about a single Avatax account with two profiles. So on that second profile, your merchant profile, we're going to want to turn on Nexus in all jurisdictions because we're going to have multiple merchants transacting against a single Avatax account. We don't have granularity of knowing, is this merchant, does merchant A have a requirement to collect tax in, say, the state of Washington? Avatax isn't going to know that. Your merchant's going to know that. So you're going to have a function within the marketplace for the merchant to specify which jurisdictions they need a tax calculation in. So for merchant A, who has a tax calculation obligation in the state of Washington, great. Process that transaction against the Avatax account, you'll get the tax calculation back. If that merchant says, I don't have an obligation, don't even send the tax calculation to Avatax because that merchant's obligated, or merchant has indicated they don't have an obligation to collect tax in that jurisdiction. There's no need to process a tax calculation. It's zero tax.
So Bob, how do I know when I'm getting close to my threshold in a given state?
As a merchant or as the marketplace?
Either.
As either, okay. So in this model, you'll have to keep track of that yourself. So because we're not recording those individual merchant transactions to the marketplace Avatax account, the merchant's going to have to keep track of their number of sales and their total revenue into those states. For the marketplace, since we are recording marketplace transactions, we do have an economic nexus analysis that will give you that indication on the Avatax account.
Oh,
Okay, so again, to summarize, merchant partner managed model, 2 profiles, 1 profile for the marketplace, where the marketplace is going to collect and remit tax. We're going to turn on the Nexus jurisdictions where that marketplace is obligated to collect and remit tax. When that transaction comes in, we're going to do a check. Is this a marketplace facilitator state? If it is, it's going to get processed against the marketplace facilitator profile. If it's not, we're going to do a check to see, does that merchant have an indication that they need a tax calculation in that jurisdiction? If they do, great, we're going to process against the merchant profile. If they don't, no need to process the tax calculation. There's no tax collected. All right, so now if we shift gears and we talk about the merchant managed model. So this is still very similar to the marketplace managed model or the partner managed model, where you're still going to have your marketplace facilitator AvaTax account. You're still going to indicate the states where you need to enable tax collection or remittance for the marketplace, and you're still going to have that gating function. So you're still going to do that check. Is the transaction a marketplace facilitator state? Yes. Awesome. We're going to process that transaction against the marketplace facilitator account, making sure we record that transaction for later reporting and remittance. Right? If it's not a marketplace facilitator state, this is where we'd have individual AvaTax accounts for the merchants on your platform, and you'd process that tax calculation against the merchant account. So in this case, you don't need the gating function for the merchant to determine if they need the tax calculation or not. The merchant's going to set up that configuration on their own individual AvaTax account. So again, here, merchants on the marketplace have their own AvaTax account. They're going to maintain their own taxability requirements. Transactions get processed against the merchant's account, get recorded to the merchant's account, so that they can record and remit the tax liability to those jurisdictions. So one thing to keep in mind, and this really applies to both models, the partner managed and the merchant managed. If your marketplace allows multi-merchant checkout, meaning I can buy on one sale order items from merchant A and items from merchant B, we need to make sure that we're able to break out those line items and process them individually against the merchant's profile. So, and more so for the merchant managed model, because merchant A may have a different Nexus obligation than merchant B. So you may get a tax calculation on item A versus no tax calculation on item 2 or item B, depending upon the merchant's profile who's facilitating the sale. All right, and then capturing transactional activity. So this comes back down to compliance. And really what we want to do, we want to make sure we capture all the transactional activity. Now, specifically for the marketplace facilitators, it's very important to capture all the transaction activity, not only for your own marketplace remittance of the tax that you've collected on behalf of your merchants, but you also need to provide reporting of that tax that you've collected and those transactions that you've remitted on behalf of your merchants to your actual merchants. Even though the marketplace is facilitating the tax collection and remittance to the state, that merchant still needs to report that revenue on their own individual tax returns. So when you're processing those transactions to Avalara, it's good to utilize a couple of the reference fields to denote which merchant actually processed that transaction, so you can provide later reporting to those merchants. So again, to keep from creating compliance issues, and really it becomes complex because we're talking about two different entities, one remitting the tax, but both needing to have reporting on that same transaction. So it can be a little complex. Now with the merchant managed model, merchants are going to have their own AvaTax accounts, so providing reporting for those merchants is really easy. You just direct them over to AvaTax. They're going to be able to see their transactions out of the marketplace. The only items that you're going to need to provide to those merchants are the transaction details on the sales that the marketplace facilitated the tax collection and remittance to. So let's talk a little bit about handling refunds. So we've talked a bit about sales and how we process sales and the different gating functions on whether it goes to the merchant or whether it goes to the marketplace. So with refunds is going to be commonplace in e-commerce to make sure that, you buy goods, you return goods. It happens all the time. So with the marketplace, the good news here with both these models, the framework's really in place. So processing a refund transaction follows the same logic as processing a sale transaction. So if the sale transaction went against the marketplace facilitator profile, where the marketplace was responsible for collection remittance of tax, we want to follow the same path. So if the refund comes in, if the marketplace facilitated that sale, the marketplace is going to facilitate the refund. The marketplace is going to take that tax credit. If the sale happened on a state that is not a marketplace facilitator state, then you process that credit against the merchant's account. Now, in the case where it's a merchant managed, you can process that against the merchant's individual AvaTax account, and they'll have that reporting information right there available in AvaTax. Now, if it's the partner managed account, since the merchant doesn't have an individual AvaTax account, you can still calculate the tax refund using the overall merchant profile. However, the merchant will have to keep track of that tax credit and their reporting for the current liability period. So, good news is creating refund transactions, really easy. We've got a great API that makes that process very seamless and smooth. So I've got a link here on the slide to take you over to the refund transaction versus return invoice, so you can see the differences on how to create those refund orders.
And for those on the call, I am putting the URL to the blog post Bob just referenced into the chat box.
Awesome. Thanks, Jeff. Great. So let's take a second. We've talked a bit about U.S. only. So U.S. only transactions, marketplace Nexus. I'm kind of shocked that we don't have many questions, because that's a complex topic.
Yeah.
So I might need some more unpacking there. If anybody has questions, please go ahead and put them in the chat window. So as we're talking cross-border support, if your marketplace, marketplaces are global now. You can buy anything on Amazon, and perhaps your marketplace is going to be the same. One of the issues that you run into with global transaction is when you buy stuff overseas, you might end up owing more money than you think at the time of checkout. So for me, I'm a big pizza guy. I've had my eye on this nice Italian wood-fired pizza oven. So I'm thinking of pulling the trigger, and it's a big expense, and it's a big tax, and it's going to get imported and shipped to my house. But I know from working here at Avalara that expense may not stop there at the time of checkout. So when that item gets shipped to me, before it gets delivered, I may get a note from UPS or FedEx saying that I owe additional customs and import duty tax. So that's, after making a big expense, getting an extra bill before you have the item delivered, man, that's a rough customer experience, right? It's a surprise expense that you didn't account for, and it's additional money that you owe before you even get the item. And that kind of leaves everybody in the lurch. The customer owes more money before they get their goods, and if the customer doesn't want to pay their goods, that means the merchant has goods somewhere outside of the country sitting in customs that they'll either need to take some action to ship it back to their warehouse, or find another sale for it. So to help alleviate that, Avalara can provide a customs duty import tax calculation. Now this is separate from the sales tax calculation. It's in addition to. So beyond sales tax, when importing goods from one country to another, customs duty and import tax is a different calculation. So we can provide that, and it'll give you the door-to-door cost of buying the good and delivering it to the merchant.
Hey, Bob, we have a question.
Mm-hmm.
And the question is, can you speak to capturing taxes on shipping and also refunding the same?
Oh, yeah. So when we're talking taxes on shipping, with AvaTax, we consider the shipping charge just another line item. So if I'm buying 3 goods, I'm going to have 4 line items in my transaction to Avalara. 3 lines for the goods that are being purchased, plus 1 line for the freight cost. The way we determine the tax on the freight cost is we associate a special tax code with that freight charge. So the AvaTax engine knows that line 4 isn't an item, it's actually a freight charge, and will take into account a lot of tax logic within the system to determine the appropriate taxing amount on that freight charge. Frequently, tax on freight in many jurisdictions follows the taxability of the items being shipped. So 2 of those items of the 3 that are being shipped are non-taxable. Only 1/3 of the freight charge is going to be taxable.
Gotcha. Okay, we have a second question. So that question was from Jeff Longman, and this question is from Corey Thomason. If you're a merchant that falls under the specialty drop ship requirements for California or Connecticut, where there is an additional markup on the goods, those merchants would have to use the merchant type so that the custom rule in the AvaTax account can be set up.
No, I'm not too familiar on is it the upcharge on the dropship, the special rules on the dropship?
Let's see. I'm not clear on what the question is.
Yeah, perhaps that's one we can flag for follow-up.
Corey said yes. Yes, that's what he's referring to.
What's that?
Corey, if you don't mind putting in your chat box exactly what you're referring to. Let's see. Okay, we'll come back to that.
We'll come back to that. Okay, well, great. Yeah, Corey, we'll come back to you on that.
There's another question, actually.
Oh, okay.
This is from Dion. What is AvaTax doing to calculate tax web, in parentheses, web store and NSUI? How does it determine when and how much tax to apply?
So AvaTax is going to take a look at when we receive the transaction, we're going to look at the address information, where the items are shipping from, where the items are shipping to, and we're going to compare that against the Nexus profile. So this comes back to, is it the marketplace facilitator, or is it the merchant, or is it the individual merchant account that we're processing that transaction against? Does that profile have Nexus enabled where the jurisdiction is taking place? If it does, great. Then we're going to look at some other things. We're going to look at whether or not the customer receiving the goods is exempt from sales tax. Then we're also going to look at the individual items on the transaction to see if there's special product taxability codes, similar to the freight codes, to determine if there's any special tax rules that need to be taken into account. For example, if that merchant is selling T-shirts into the state of New York, if you associate our general clothing tax code, PC 040100, to your clothing items, we have logic in the tax engine that if the item is underneath $110, it's exempt from sales tax. If it's over $110, it'll become taxable. I hope that answers the question.
Okay.
Okay, so cross-border support. If we don't tell folks that they owe additional money when they receive the goods, it's a bad customer experience. Avalara can help you calculate that amount so you can have a good customer experience for your customers. All right, so we touched briefly on this, was exemption certificates. If your marketplace is dealing in B2B sales, this is kind of a big one. So anytime you make a B2B sale and you don't charge tax to the customer, you really need to have backing documentation on that, why you didn't charge tax to that customer. Because one day an auditor is going to come knock on your door and he's going to look through your books and he's going to find a transaction that didn't have tax calculated on it. And he's going to ask, hey, this transaction looks to be exempt. Can you provide me the exemption certificate for this customer so I know that they're exempt from sales tax and that you did your job appropriately here? This is a very manual process. So historically, a lot of companies, they have a file cabinet or a folder full of exemption certificates. Some might be expired, some might not be valid. You have to source them from your customers, snail mail, email, fax, a lot of different ways. Avalara really makes this easier and streamlines that process of collecting the exemption certificates, even at the time of sale. So new customer who's a business entity, sourcing items from your marketplace that they want to resell, but they haven't provided their exemption certificate to that merchant, you can capture that exemption certificate during the checkout process. So Avalara provides that functionality so where you can, as I'm checking out as a business, I can click a link to upload my exemption certificate so that the merchant has the backing documentation on file so that I can be exempted from my sales tax on that order. So we've got some additional reading for you here on the slides. We have a cert capture for e-commerce, that's specifically that functionality of capturing the exemption certificate during the checkout workflow. And then the Avalara Cert Express portal where customers can log in to upload certificates and generate exemption certificates on the fly with just some minor information that they have. All right, so let's talk about open source connectors and how we can help you in building out your marketplace. So if your marketplace is just starting up, perhaps you're looking at different technology platforms on what you might want to use to leverage for your marketplace platform. Would highly recommend you guys take a look at some of our connectors. We have over 700 connectors, and the list keeps growing and counting. Some development work may be needed, but a lot of these open source connectors have existing AvaTax functionality, and you can leverage that existing AvaTax functionality in your marketplace. So some development work will be required, but it's absolutely a head start and a jump on getting a marketplace set up with AvaTax integration. So if you're using a custom solution, that's no sweat. You can build directly to the API. So you can get tax compliant really with just 3 API calls: create transaction, refund transaction, and resolve address. So I know if any of you have taken a look at our API documentation, there's a lot of information, a lot of endpoints out there for a lot of functionality. But really, if we focus in on kind of the core here, it really just takes 3 endpoints to get yourself tax compliant.
Hey, Bob, a couple of questions. The first one is from Adam Kostopoulos, and he says, Avalara delivers a boxed NetSuite integration. In my business, I charge taxes based not on the customer's shipping address, but rather a second address where the goods/services are rendered. Is it possible to feed this second address to Avalara for proper tax calculation?
The second address, meaning the service address? Yeah, I believe so. Now, I'm not wholly familiar with the NetSuite integration. Yeah, okay, with the NetSuite integration itself, that may require some modification or an enhancement. I would recommend you contact our support group and see if they have some instructions for you on how to modify which address type is sent to Avalara for determination. And if not, they can at least put an enhancement request so that can be an option on that connector.
Okay, great. And then Dion has a few more questions.
Sure.
Can we get an AvaTax customization on the web order so it's calculated correctly? Customization that will work using our business rules.
So within AvaTax, we do provide the ability for you to modify or change any of the tax rules that we have in place. So if you disagree with the determination or you have different business logic for, say, the state of New York, that previous example, clothing is exempt if it's the single items under $110. If you wanted to modify the behavior of that rule to make it where clothing is exempt if it's under $100, you certainly have that functionality. So within AvaTax, you can create custom rules to impact the default rule set of AvaTax system tax codes, or you can create whole new tax codes and create your own rule logic that goes behind those codes.
Gotcha. Okay, and then Dan has a question. How does the refund transaction work in regards to just refunding the tax if a customer submits an exemption after the invoice? Does it post a new transaction to adjust the total sales amount? So when taxes are filed, the gross sales is adjusted.
Yep, it's exactly that. So with the refund transaction, what we want to make sure is we record the sale, and then we record a separate transaction for the refund. Now, that may be in the same reporting period or maybe in a different reporting period. So in the case, we always want to record separate transactions for these. We never want to modify the original sale transaction. So when the original sale transaction takes place, say, June 1st, and then the item gets returned, July 15th, well, if you're a monthly filer, you're going to report that sale with your June returns. Now, when that refund takes place in July, we want to use the tax date of June 1st, the original sale, to calculate the refund. So the AvaTax API will do that for you automatically, although you can also do this a manual process by passing a tax override tax date. Now, the reason we want to calculate the refund credit using the June tax tables is because in some cases, the tax rate may have changed between the time of the original sale and the time of the refund. So even though we're posting the credit in July, we want to use the same tables as the June sale to calculate that refund so we can post the accurate credit in July.
Okay, and then we have a question from Jeff Longman, circling back to taxes and shipping. We've seen shipping tax owed go up when a non-taxable item is returned on an order containing both taxable and non-taxable items. How can we account for this when we already captured the lower amount of shipping tax?
So the case is you shipped an item, you had 2 items, one was taxable, one was not. And then you returned, I'm sorry, could you repeat the question, Jeff?
Oh, I'm sorry, it disappeared.
Oh, okay. So in that case, we may want to take a look at what information is getting sent to Avalara And this is one of those cases where perhaps, I'd encourage you to contact the support group to get into some troubleshooting and diagnosis on it, because it doesn't sound like what you're expecting is happening. So with Avatax, it really depends on the jurisdiction. If you're shipping to a jurisdiction where it's tax depends is kind of the logic. If the freight tax depends on the taxability of the items being shipped. If the item is non-taxable, the freight should be considered non-taxable. So if you're not seeing that same result, you should contact the support group for a little further deep dive onto it.
Okay, great. And then Dion has another question. Keep them coming, Dion. How do we determine what gets sent in a data request to Avatax and when? So we can make sure that by the time a request is made, we have the right info on an order.
So the information that gets sent to Avatax is primarily the information that you put on an invoice. So we're talking the origin address, the destination address, so where that item is coming from and where it's going to, and then the item details themselves. So the line items on that invoice, the item name, the item description, the quantity, and the extended amount. And that's a key distinction there, Jeff, is the extended amount. We want to make sure that when you're passing a transaction into Avatax, if you have one item and it's $2, great, you're going to pass as the extended item $2. But if that quantity goes up 2 items, you're going to want to make sure you pass as $4 as the total amount. He passes that information. If that item has any special taxability treatment, clothing, for example, we want to make sure we associate the tax code with that line. And then also with the freight charge, we want to make sure that the freight charge is on that transaction. We also have an applicable freight code going along with that line item.
Gotcha. Great.
All right. Good on questions?
So far.
So far, fantastic.
For now, yeah.
Okay, good. Well, then we'll keep charging along here. I think we're nearing the end. So if you got more questions, keep them coming, please. Oh, as a matter of fact, yeah, here we are.
It is the end.
It is the end. So here we are, folks. So we have a bunch of resources available for you. So I know we talked about a lot here today. So did want to make sure that you check out our quick start guide for marketplace developers. And if you want to see our API in action, we have a really cool demo. It takes just a few seconds to see, kind of a transaction in detail. As a matter of fact, for Dion, who is looking at what information needs to be on the transaction, this would be fantastic. So Dion, if you want to click that link, the Avatax demo link, you'll be able to build a transaction kind of on the fly in a nice little UI to look at, what does a transaction of the JSON request look like when I'm shipping from, Washington to California, and I'm shipping, a baseball glove. And it'll build that out for you so you can see that information right there. And then if you're ready to kind of dive in and you want to take a look, you can get yourself a 60-day production account and make some unlimited calls and just try the service out. So head over to developer.avalair.com/Avatax and make sure you sign up for that free trial.
Yeah, and I just put the link to the API demo in the chat box, and I'll put the free trial link there in a moment. We have a couple more questions. Dion asks, is there a way to set up a call with a technical representative to talk about this issue? Where do we direct technical questions to?
Yeah, support.avalair.com or pardon me, help.avalair.com. That's going to be your primary resource. And if you scroll down to the bottom of the page, there should be a contact us link.
Okay, great.
And there should be a phone number there, and that can get you connected with a support group. Additionally, if you have an Avatax account, you can always log into the account. There should be a chat with support link there on the homepage of the Avatax account, and that may be a faster way to get answers to your questions there.
Okay. And then Corey asks, my question is confirming that you cannot apply the custom tax rules logic can be applied when using the partner model at the merchant level, that is.
That's correct. So at the merchant level, in the partner managed model, so that's that model where you have one single Avatax account, one profile for the marketplace, and one profile for your merchants. If you create custom rules on that merchant profile, it would impact all the merchants on that profile. So custom rules specifically for merchants would be better off in the merchant managed profile, where the individual merchants can impact their calculation on states where it's not the marketplace doing the tax collection. Now, if you're talking about can I create custom rules for the marketplace states on the marketplace profile, absolutely. Absolutely. Just keep in mind that you still need to report, or you still need to provide reporting for your merchants on those transactions where the marketplace did the collection and remittance of tax.
Great. And Bob, I wanted to mention, you mentioned earlier in the webinar that there are basically, I think, 3 API endpoints that drive a lot of this. Those are all available in a quick start guide or a reference guide for marketplace developers, which I've put in the handout section. So please be sure to download that and check it out. It's got a lot of great documentation in there around all of this stuff. And if you have any questions, then who should we tell them to contact? Would that be help.avalera.com?
Yeah. Help.avalera.com would be a great starting point. And if things need to get bubbled up and escalated to the various groups here, compliance, engineering, whatnot, that's a great starting point.
Gotcha. And then we still have time for more questions if anyone has any. We are well ahead of schedule here. And I'll also put the deck that Bob presented today into the handout section as well.
So I think kind of the key takeaway here, Jeff, is it's complex and it's changing. So as we're talking back and we look back to all the states here. As a matter of fact, let's pop back up here to our listing of marketplace states. Ooh, way up at the top. Marketplace states here. This is dynamic and it's changing. And the thresholds vary from state to state. Now, this is something that as a marketplace, you're going to need to keep track of. So as the marketplace, passes $10,000 of sales in Minnesota, that marketplace is going to need to go out and register, collect, or remit tax in Minnesota, which is vastly different than, say, New Jersey, where it's a threshold of $100,000 or 200 transactions. So depending upon your volume, if you're high volume, low value, you're going to trip thresholds kind of across the board. Some states have just a dollar threshold. Some states have a dollar or a quantity threshold. So the marketplace is going to need to keep track of which states they're crossing that threshold in and make sure that they update their gating functionality appropriately on either model, on either the marketplace managed model or the merchant managed model.
These thresholds seem all over the place, and to a layman like me, I'm curious, what drives, why are they so all over the place?
It's your government at work, really, is what it comes down to. Yeah, so, the states have the ability to set their own rules when it comes to this stuff. There's not a governing federal level that's going to dictate these thresholds. So each state has the independence to set their own thresholds on what economic nexus is. And this is why it gets so complex. Before, when it was physical location, it was very easy. If you had a physical presence in that state, there you have nexus. But now with these economic nexus laws, the states have the independence to set their thresholds, as they see fit. So some states may set it really low, like Washington, $10,000 in a 12-month period. I mean, that's a pretty low threshold. A lot of marketplaces that have a customer presence in Washington, they're going to end up tripping that, and they're going to need to keep track of that to make sure that when they do cross that threshold, they update their gating functionality or their traffic count to make sure that they send the transactions to the state of Washington to the appropriate profile, whether it's the marketplace account or the marketplace profile, depending upon which model we're doing, the partner managed or the merchant managed.
Okay, and then we have a question from you, Lady Gonzalez. What would be the best way to go if I wanted to make an item inside a transaction tax exempt, only the one, not all items? This would be possible using the API. Is this possible?
So item taxability is driven by tax codes. So this is one where you want to be a little careful because, like the marketplace thresholds, different states have different laws when it comes to taxability. So because my T-shirt is taxable in New York when it's over $110, if it's sold in New Jersey, it might not be taxable at all. So the best thing I can tell you is to really look at the item and try and find on our tax code lookup site, Jeff. This might be a good one to drop in the chat link. Taxcode.avatax.avalera.com.
Tax code.
Yeah, it's a bit of a mouthful. Taxcode.avatax.avalera.com. I'll let you make sure it pulls up. I believe that's the right one.
Okay.
Did it pull up?
I haven't.
Haven't tried it yet? Okay. Well, I hope that pulls up for you. I believe that's the right one. The best thing I can recommend for you to do is look on that listing. That's a listing of, we've got well over 2,000 product taxability codes. So you can do a search on there to see if you can find a tax code that fits the item that you're trying to sell. and then utilize that code, because what AvaTax will do is, depending upon where that item sold, if that tax code is associated with the item, we'll look to see, are there any special taxability treatments that need to be applied to this transaction in this jurisdiction. If there are, great, we'll take care of it. Now, if you disagree with our tax rules, you can certainly override them by creating a custom rule within your account that's specific to that code.
Okay, and I just put that page into the chat box for everyone.
Now, when we're talking exempt customers, customer exemption is handled differently. So within the API, there's a couple fields where we can leverage exemptions, or if the merchant or the marketplace is leveraging the AvaTax cert capture solution, we'll identify the customer ID as the exemption trigger based on whether or not that customer has an exemption certificate stored within the cert capture or AvaTax systems.
Great. I am not seeing any other questions. I want to give folks as much chance as possible.
Yeah, absolutely. So it's as we can see here from the marketplace states that are enacting new laws, July is going to be a big month. So anybody that's got a marketplace, big changes coming July 1st, especially if you have your transaction threshold on these states is going to vary similar to the ones that are already out there. So a lot of checking and looking to do to update your systems.
Okay. What's driving that on July 1st?
That's just when these laws go into effect in these jurisdictions.
Oh, gotcha.
So a lot of these places, they've been working on legislation, and you know how government rolls. Some are faster than others.
Right. Okay. And I am to accommodate Dion. I just want to let you know, Dion, I am putting the deck that Bob presented into the chat box as a PDF at your request. You should be in there in a couple of seconds. There you go. All right, we have another question. Love this. Keep this guy going. This one is from Jeff Longman. Okay, Jeff asks, is there a code for freight where the fee is less than the actual cost of shipping?
So the typical freight, and our default freight code is going to be FR 020100. So that's FOB destination via common carrier, and essentially that's a pass-through charge. So you're not upcharging the freight cost to the customer. You're just passing whatever the freight cost would be along to the customer. So you can certainly utilize that same code. I'd imagine if you're charging the customer less than what the actual freight is. That sounds like it might be appropriate.
Okay. All right. Let's see if we have any other questions.
So when and that brought up another item here, Jeff. If we come back to the remittance here, or the merchants have. Let me find that slide here. Excuse me. Capturing the transactional activity, being all about compliance, and what was it under? Oh, it was under the multi merchant checkout. So when you're processing a transaction with a multi-merchant checkout, you want to make sure that if each merchant has the freight charge, that we're incorporating that into the transaction processing. So again, the scenario is I'm buying one order from two different merchants. Merchant A is going to have a freight charge plus items. Merchant B is going to have a freight charge plus items. We're going to make sure that we process those freight charges independently against each. Essentially, we're breaking out a single transaction into two based on the number of merchants fulfilling it. So important to keep multiple freight charges on that account.
Okay, good. I don't see any more questions. I guess this is kind of last call for questions. You don't have to go home, but you can't stay here, kind of thing. Thank you, everybody, for attending. There's been a wealth of information and material that's been presented to you today. I hope you found it helpful. Our next webinar is in July, and let me see what that is so I can put that in the chat box as well. Oh, we don't have it up on the site yet. Bummer. Okay. Well, we'll have to, let's see, what is it about?
Whatever it is, it's going to be amazing.
Oh, it's good. It's good. So the next webinar, so mark your calendars, is at 10 a.m. Pacific time on July 23rd, and it is on supply chain management and use tax automation. And Mark Wilhelm, who is the director of the partner launch team, will be presenting. It's a presentation that garnered a lot of interest at our annual Crush event at the developer track there. So the sign up for that will be available soon. And let's see if there are any more questions. I don't see any. All right, everyone. Well, thank you very much for your time, and we will see you in July.
Thanks, everyone.
Thanks a lot.